Proposition 45 deals with expanding the role of the state insurance commissioner to include approving health insurance premiums for different levels of health insurance. So who is the California Insurance Commissioner and why is he so important? You may recognize the names Dave Jones and Ted Gaines from the primary election ballot in June. Dave Jones is the current California Insurance Commissioner running for re-election, while Ted Gaines is a state senator running to replace him. Ironically, while suing the California Insurance Exchange over insurance policy cancellations. In 1988, the California Insurance Commissioner was given the task of approving insurance rates for policies like car insurance or homeowners insurance. The Commissioner was given the authority to reject insurance policies that were deemed too expensive for what was provided, and thus was able to negotiate with insurance companies to reduce premiums. The Insurance Commissioner does not, however, have authority over health insurance policies. Rather, the DMHC and the CDI have oversight over health insurance rates. These organizations review health insurance rates, but even they don't have the authority to reject proposed health insurance premiums. This proposition would give that authority to the State Insurance Commissioner. Specifically, this authority would be given only over individual or small group employer insurance policies, with the goal of allowing the state to negotiate for lower premiums for these groups. Larger group employer policies would remain exempt from this control. Since the insurance market is already highly competitive for large group employers, these groups probably don't need the state negotiating on their behalf. But lowering insurance premiums for individuals and small businesses could theoretically grant them a competitive advantage over large group employers in managing costs. It may indirectly force large group insurance premiums to drop as well. While there is likely not going to be a significant increase in state costs associated with this increased oversight, Prop 45 grants the state authority to collect the funding needed by imposing additional fees on insurance companies. Given that the total money potentially needed to expand this role of the insurance commissioner is less than 1% of the net income of just one of the insurance companies that would be subject to these regulations, it's unlikely that these costs will put them in financial hardship. As mentioned earlier, the insurance commissioner was given this authority over car insurance rates back in 1988. Since then, we have seen arguable decreases in average premium costs relative to the rest of the United States, and car insurance companies are still able to make profit in these conditions. There might be some added difficulty related to this proposition, as rates could potentially be affected retroactively, requiring health insurance companies to pay refunds to customers. On the other hand, it is likely that California will not see the same drop in insurance premiums under Prop 45 that we saw from 1988. Simply because the California Insurance Exchange recently created already approves insurance costs that are sold through the exchange. With this in mind, Prop 45 simply creates a redundancy, with both covered California and the California Insurance Commissioner negotiating for lower premiums. The effects of enacting this proposition would likely depend greatly on the elected insurance commissioner. Dave Jones, the current commissioner, has already done some negotiating with health insurance companies without the need for the authority granted by Prop 45, and advertises that he has reduced some consumer costs through his efforts. Ted Gaines, on the other hand, actively opposes Prop 45 and wants to greatly reduce state control over insurance companies. With his platform, he won 41.6% of the vote during the primary election, with Dave Jones winning 53.1% of the vote. How Senator Gaines managed to win 41.6% of the vote while running on a platform stating he doesn't want to actually do the job of the position, I have no idea, but I wish the best of luck to both candidates in the November election. Lastly, Prop 45 adds a provision preventing insurance companies from using credit score or coverage history in selling policies to customers. This provision will likely not have much of an effect on anything, as current law already effectively prevents this. In practice, insurance companies simply do not do this, and there's little reason to think that they will try to in the near future.